It seems everyone is looking for a setup in the market that points to a reversal. We have 3 stocks today that fit the bill. Let's take a look. As the old saying goes, buy low, sell high. But guys, we know if it was that easy, everyone would be doing it, right? And while we're not financial advisors, I know that you've stumbled across some stocks that do present opportunity for us. So let's start with you, Thomas. But first, I want to know, what are some of the indicators or analysis tools that can help us determine if a stock has found a bottom?
Well, there's two things I like to look at, and one is the technicals and the other is sentiment. With the technicals, you want to see the stock make a bounce from a support zone. But more than that, you want to see that bounce develop into a pattern, either a double bottom or a head and shoulders. V bottoms do occur where the stock just moves down and then bounces right back up, but they're pretty rare. And I would say that most times, if you look closely, you'll be able to find a head and shoulders or a double bottom within that V pattern. Along with that, the sentiment, the outlook doesn't have to be good. It just has to be better than now or getting better than it was. Any change in sentiment that can lead investors back into the market will help the stock to bottom. And so again, as sentiment changes, you can see that in the price action as the stock kind of stops falling and starts moving sideways. The analysts are a good gauge to watch for the sentiment. If their price targets stop falling or start moving higher, that's a pretty good sign that the stock is going to bottom too.
All right. So with that in mind, can you show us what stack you have for us that you found that are primed for a reversal?
Right. The first two on my list are PetMeds and Kohls. And I would say that both of these are pretty early in their reversals. They haven't really formed a pattern yet, but they've hit the first part of the bottom where I think that sideways action will start to build from here. But with PetMeds, they were losing share from Chewy for years. Their focus was too narrow and Chewy was out competing them. But now PetMeds is fixing that. They're working to become a nose to tail wellness company, expanding their revenue streams. They're investing in people, product, and technology, and growth is expected to return by the end of the year. It's got an 8% dividend too. It's a little bit risky, but they seem committed to paying it right now, and it's safe enough until the end of the year, so they could pull this thing off. The analysts haven't really started changing their tune so much, but the institutions have been buying, and that's another big indication that the bottom is, if it's not in, it's pretty close.
Chris, do you have any comments on PetMeds at all? What do you think about that stock?
I haven't followed PetMeds that closely. I did see it on Thomas's list. I'm a little curious about Chewy itself, because I was looking at Chewy when I saw Thomas had picked PetMeds, and Chewy actually, it looks a little bit attractive itself. It's down, it's down, probably trading at about a 4-year low right now. I think it went public actually in 2019, so I think it's trading actually below the price that it started out with in 2019, and it's also expecting earnings to grow this year in a year when earnings are expected to fall. I didn't know if Thomas had any thoughts just about saying what if companies said, or what if investors didn't want to take maybe a risk in PetMed, but they just wanted to go say, okay, let's maybe play it a little safer with Chewy.
Well, I don't own PetMed, but I do own Chewy. So
Okay.
Chewy's the market leader. PetMed is definitely set up for a reversal. Chewy's the market leader. They're also set up for a reversal. I could have easily picked that stock as well, but PetMed was on my radar more recently, and that's the one we went with today.
Good. All right. You also had mentioned Kohl's was on your list. So what do you have to say about Kohl's?
Well, Kohl's is kind of a similar story. They've been struggling for a little while. They had some share price declines. Some of that's due to the COVID bubble, and the supply chain didn't help. They've been making some changes. The recent results were very nice. The guidance is improved. It's looking like things are on the upswing. The analysts are still a little bit mixed, but the institutions have also been buying this name. So the bottom is probably in or pretty close. And once again, we're talking about a high yield stock. It's a 10% yielding stock. Part of why the share prices went down is because there was risk of dividend cut. But right now, the company's standing by it and the results are improving. So it looks like that yield is pretty safe. And that could really be an attractive draw for investors to help that stock bottom and revert.
Chris, are you looking at Kohl's at all?
I'm really not. This is, I think, a case where I probably would say I like the store more than I like the stock, or at least my daughters like the store more than I like the stock. What I would think is that as far as the retail sector in general right now,
Mhm.
I don't disagree with anything Thomas said as far as his analysis. I'm not convinced that there's a lot of upside here right now. Heard an interesting statistic that said the consumer has been very resilient, which is unquestioned, but the consumer is basically spending at the same level. They're just paying more for it because of inflation.
Mhm.
And we're going to get the PCE number out on Friday. Just not really sure where the growth is going to come from immediately in the retail sector. So if I was going to play the retail sector, I'm not sure if Kohl's is a name I'm going to look for growth. But, you know, again, I don't disagree with anything Thomas said in the analysis. It's just not a stock that I'm particularly looking at right now.
And with Kohl's and retail in general, Chris, you're right. The growth isn't really going to be there because you're trading off discretionary items for food.
Right.
Spending stays the same, but discretionary people are definitely going to be hit from it. Within all this, Target and Walmart are reporting shifts in trends, and TJ Maxx, and Kohl's kind of fit into that, where
Yeah.
they're reporting that consumers are shifting from discretionary to food, but also
Right.
from higher price to lower price.
Right.
And Kohl's and TJX have both proven to, and for them, it's not so much the fact of growth as cash flow, profitability, and dividends.
Thomas, are those your picks or are you looking at anything else?
Well, you know that I can't let it go without talking about Kraft. I mean, Kraft is a textbook turnaround story. I'm talking about a stock bottoming and taking its time to round. Kraft Heinz is a big, big ship, and it's taken years for it to bottom, and it's taken years for the reversal to happen. But this is a text reversal that you can watch happen on the charts right now. You can pick any of a dozen technical entry points and probably do pretty well with this stock. If you're looking for capital gains and dividends over the next 5 to 10 years, I think that it's going to be one of the best performing stocks in the S&P 500.
You in that stock, Thomas, I'll tell you what.
All right. It's got value and yield. I can't help it.
I will
Thomas
say
has single-handedly put that stock on my watch list.
I will say, Thomas, I'm slightly shocked that you didn't present a tech pick. Is there any reason why that was ruled out?
Well, none just sprung to mind. There are a ton of possibilities out there, and one that really does spring to mind now is kind of cloud and security. Those have been setting up for a reversal for the last couple of months, and I think that could happen maybe this quarter over the summer. That's depending on how the results come out. Snowflake was a little bit weak, and that stock has pulled back, but some of the others like Zscaler and Datadog might do much better.
All right, so Chris, you're up. I know that we had mentioned we were only going to talk about 3 stocks, but I know Thomas just wanted to keep talking about stocks. Here we go. You have your chance, though. What bottoming stock do you have your eye on?
Yeah, so I'm going to actually stay in the pet sector, and I like WAG, the WAG Group. Ticker symbol is PET. So this is a company that it's not yet profitable, and that's the risk in this market because right now is a time when I know I preach on these videos all the time. You stick with the best, you avoid the rest. But this is a company that's not yet profitable, so it's more for the speculative investor. But it is expected to be closer to profitability by the end of the year. As Thomas was mentioning with both Kohl's and with PetMed, institutions are buying heavily into this stock. Right now, the stock is, according to analysts, has about a 221% upside to it. What makes you maybe believe that it could happen is the company is launching a special services platform. So it's going to give pet caregivers the opportunity to list over 24 new service types, which they can set their own prices and give pet owners, unique experiences for the care that they might want for their pet. So WAG Group's certainly going beyond just the idea of coming in and walking your dog or doing things like that. And it's an interesting category to me, and the stock looks interesting to me.
Thomas, are you on board with this pick? But I'm also curious, what made you guys decide to stay in the pet sector? I feel like that sector isn't talked about much.
Well, pets are kind of a sleeper section. It's not exciting. It's not growing fast, but it's growing. It's been growing for years. Americans are buying more pets and spending more money on them, and so stocks like WAG Group that offer services, it's like 12 or 15% of all pet spending. It's one of the fastest growing segments in the market. It's highly fractured. They could easily consolidate it. I mean, in a sense, WAG Group is almost like Camping World. Camping World is consolidating an unconsolidated industry, and WAG Group could do the same, become the number one name in pet app services. So there's definitely an opportunity here.
Well, thank you guys for exploring these bottoming stocks with me today. MarketBeat is going to be your source to present the possible reversals here and the compelling opportunities for investors. So stay tuned for more news from us. We'll catch you here next time. Thanks, guys.